Hello, good morning everyone, and welcome to Nixu results for first half of 2019. And first I have to apologize, not for the results itself, but my flu, which I kind of managed to get immediately once daycare started, and not my daycare, but my child's daycare. So I might be a little bit off with my voice today, but let's hope we survive. And welcome everyone here at Scandic Simonkenttä in Helsinki, and also everyone over the lines in the webinar. And my name is Petri Kairinen, I'm the CEO of Nixu. Before going into actual results, I want to touch a little bit on the development in the cybersecurity market and what's been happening around the marketplace. And this is the slide Marriott preached that I showed also in our results call for 2018 in February. And it was a huge hack which affected about 500 million people. And interesting note about it was that the breach dated back to 2014, which is now new information, but it was not discovered until November 2018. And this highlights the fact of a lack of detection capabilities in many organizations, and you know, the kind of so many things happening under the radar, so to say, and below the surface. And of course it's tied to Nixu's capability to monitor and detect cyber threats of our clients. Marriott is not our client though, so this is a generic example. I think another interesting fact about this is that the UK Data Protection Authority said that it will issue a sanctions, data protection sanctions, about 100 million pounds, so about 123 million dollars. For this data breach, and obviously Marriott has also stated that they're expecting the losses of about 150 million euros from this case. And I think this is of course not uncommon that companies issue these damages, but the scale of these damages is so vast that it highlights quite nicely the kind of the market dynamics in this market. That once you get hit in a large organization, the amount of damage is so huge that it's worthwhile to protect yourself. So the kind of the cybersecurity industry still will receive investment and so on, because the kind of the losses, possible losses are so high in many cases, and they have been increasing over the years. So this trend is definitely continuing, and there are lots of hacks continuing. Finnish locally, and sorry for the Finnish language slide, it's taken from a local Finnish news, but we've seen these Finnish cities being hacked, and I think this is of course a smaller scale, that hundreds of thousands of euros was the cost for Lahti city, that they got the breach, and there were a couple of other local Finnish cities also hit, and I guess the kind of the quote by the Lahti mayor that our information security level was not sufficient, I think that is pretty outspoken comment, and I have no further additions to that. Actually, I think that's pretty much the case for many organizations nowadays. And I think, for example, the Finnish cases, all the city attacks, as far as I know, were very much non-targeted attacks with malware, ransomware malware, trying to extract money from whatever target they encounter. And the municipalities and cities typically are, let's say, the ones that are least prepared for these sort of attacks. Of course, the bad thing is that the harm to citizens and people living in the municipalities, in Lahti case, I think the healthcare sector was very heavily affected, and that's when everything is connected, this becomes a huge issue for digital society. And this brings us again to Nixu's mission statement, which you've seen earlier, that we keep the digital society running, and I think this sort of events happening faster and faster highlights the need for proper digital trust in our society, and doing right things right. And that brings us to our financial results and what's been going on with Nixu, and I have to say that our first half of 2019 was very successful. We managed to score 32% growth, and also with very significant improvement in our profitability. And in a good level, obviously not the kind of the optimal or best possible level with profitability, but also a significant improvement and return into black figures. So I'm very happy about that. And if you look at the summary in figure wise, we can see that the revenue reached 25.7 million euros with a growth of 32%, and out of that 32% there was an organic growth of 23%, and then a addition from acquired companies Esenta and Vesper CTI during the Q2 of this half. And the revenue from managed services continued to grow with a very fast pace. And with managed services, we mean technology-enabled services like Nixu Cyber Defense Center, which is the monitoring center of Nixu. And there the growth was 107%, and we came up representing already 15% of our whole revenue during H1 2019. And that's starting to become a very significant portion of Nixu's revenue. And you may recall that we started like 3-4 years ago, and we started with very small percentages, and obviously then the growth percentages were even higher. But as we are scaling up and into this level of business, I think it's very impressive that we can still continue with 100% growth there. And in the EBITDA level, we made about 2 million euro EBITDA, with the adjusted EBITDA being slightly higher. And adjusted EBITDA is in this case mostly considering the acquisition cost and such non-operational things. And from the efficiency, we can say that the efficiency in operations in all fronts increased, meaning that our indirect cost, the relationship of indirect cost into direct cost, was lower. We were more efficient in our utilization and overall, did things smarter. There was no huge savings campaign or anything like that, so we were not removing pencils from the desks of our employees in order to reach these results. So this was more of a matter of getting right things right and getting things in shape. I will come back to the EBITDA a little bit later on the next slide. And here you can see the growth trend across the past halves, and that's been quite steady growth, and obviously now we got the very fast growth half, and have to say that after 2018, where we had issues with the profitability and the profitability sank lower, especially during the first half of 2018, we started doing these moves in the right direction in correcting matters, and those were very much on the run during H2 already. And obviously when you are trying to repair your profitability, there is the chance that you also affect your growth rate at the same time. But then actually the growth during the Q1, organic growth was huge, and that was mainly due to the large partnership deals getting up speed and so on. So in this case, we managed to keep up the good speed while also improving the profitability at the same time, and that's something that I'm really happy for the team and for what Nixuans have been doing. So thank you everyone at Nixu, knowing that many of you might be listening through the webinar as well. So I want to thank you there. In the EBITDA levels, also each looking at half figures, you can see that 2018 we started dropping. In 2017 we got acquired some companies with less relative EBITDA shares anyway, so that pushed us down, and the H1 2018 was bad, but in second half we started already getting in the right shape, and now obviously we are in a very different level than in the previous halves. And as we've been saying, we are doing a significant growth investments and are still doing those. So we are not like stopping any big growth investments, but it's more like getting the efficiency in the right shape. And at the same time, obviously, we are stating that this might not be the regular level, because we still reserve the right to kind of invest the profits into the growth as we see it fit. The EBITDA also includes a windfall gain of about 500,000 from IFRS 16 changes. So we will, on a yearly level, we will gain from that change about 1 million euro windfall, which is the mainly the rents of our office spaces that they in IFRS 16 they are counted actually into the debt side and away from the EBITDA. And the other part of that, or let's say the negative windfall, comes into our debts, where the net debts increased by 3 million euros due to the IFRS 16 change. So if you are wondering about those figures, that's where it comes from. But even without the IFRS change, I think we've reached very nice figures on our EBITDA. And again, very thankful for the whole Nixu team in making this happen. Any questions at this stage? there are more chances later on. So okay, Mika, there's a microphone. Marco, could you keep that?
Can you elaborate a bit what does this mean? This may not be regular level for growth investment.
Okay, that's true. That's a very good question and very bad wording from my part. So what I mean that this EBITDA level may not be the regular level, the 8%, meaning that now we are there, but it's not like, you know, we will always promise to continue that level in the future, because we reserve the right for the growth investments and we do those as fit.
So there's kind of like more pressure downwards than upwards.
I'm not saying that there's pressure anywhere. I'm saying that you know, you should be cautious and so on. That what's the kind of the right level for the EBITDA. I guess that's what I'm saying. That you know, we and that's more regarding. I wouldn't say, if I elaborate a little bit more, I wouldn't say that there is pressure somewhere that we know that there are some costs coming. We actually expect the kind of the continuing operations to improve in their profitability and so on. So cutting the international losses further and so on, and keeping the allocations higher. But then at the same time, obviously, we might encounter a new investment area where we want to start investing, creating a new service, for example, in addition to Cyber Defense Center. And for example, in the digital identity space, we are looking into providing that sort of services as a service as well. And if we start heavily investing into that sort of vehicles, obviously that will eat up again the kind of the EBITDA somewhat. But that's how much that effect will be and so on. It remains to be seen, and there are no like such decisions drastically affecting the EBITDA. If that kind of opens up a little bit the thinking. Very good question. Thank you for that. And then obviously looking at the where are we going, digitalization done right is our value promise to our clients, and again reminding of Nixu's key competitive advantages, having the security competence, having the digital identity competence, and then the privacy competence coming together, and that is the kind of the spot where our clients need to make their operations better if they want to succeed in their digital transformation. So that's there. And then looking that from the other picture and thinking of the market drivers for cybersecurity, especially now when we are seeing a lot of news from the world regarding possible recession and tuning down of German market and so on. I understand that there are worries about what will happen, and I just wanted to remind that the market drivers for cybersecurity are quite strong. There is, first of all, there is the ongoing digitalization trend, which I think will continue and will need to continue. And as long as that continues and business is more and more pushed towards the internet, there will be cybercrime happening. And in times of recession, you don't see cybercrime going down, you actually see cybercrime going up. So that threat to our clients will remain there. And at the same time, there is an increasing regulation coming, forcing companies and organizations to do something regarding data protection, for example, and so on. So there are pretty strong market drivers, and I suspect that even in times of recession, this kind of trends need to continue and the investments need to continue. So far, we haven't seen effects of cooling down in our orders or in our client behavior. So everything looks good still from that perspective. Our growth investment strategy, I've shown this picture as well earlier, and right now we are in this phase, so 2018 to 22X, and this is the establishment and growth phase. So at the same time, we need to be building our platform, building the One Nixu capability, integrating entities together, making sure that the construction that we are doing is stable and you know, stands time, so to say, so it doesn't fall apart fast. And at the same time, we still want to grow. And all of these actions obviously place this burden in our profitability, as we've stated. So we are not running on the full optimal profitability. And then of course there is the at some point in the future where we see that the market has consolidated enough that let's say the times of fast growth are getting harder and harder. And then of course we need to be in a position where we leverage the whole construction that we have built and use those economies of scale from there, and then we can reach a level of profitability that's wholly different from the ones that we have been doing during this time. And I think this is a very important point to remember all the time when looking at Nixu and our figures. Next, I wanted to go through a couple of highlights from this first half. 2 acquisitions mainly, and the Esenta AS was our largest acquisition, and actually the largest acquisition so far for Nixu. So Esenta was a Danish cybersecurity company, 100% cybersecurity company, with a 8.8 million euro revenue in 2018, headquartered in Copenhagen. And for us, the strategic reasoning for Esenta was establishing the market area for Denmark, so having an access to Danish clients. We already have been serving some Danish clients from Finland, but as we have stated, the client intimacy, being able to be near the clients and work with them close by is a very key in this industry where trust is everything. So in this case, we now get a base there, and then we can start growing that base to be more like Nixu and working with Nixu in many areas. What was interesting in Esenta was that it also adds managed services capability and incident response and forensics capability. They've been working with a little bit different technologies than Nixu is working, but actually providing similar services. And their MDR, managed detection and response offering, is actually also listed by market analyst firm Gartner. So they are listed in European space by Gartner, and that's very, very nice for a company of that size, getting access there and getting visibility there. And there is a lot of synergy and, let's say, similar-minded people than Nixu CDC. And of course, we look forward in integrating these offerings together on the longer run. One other component which Nixu wasn't doing that heavily was the technology resell capability. So traditionally, many cybersecurity companies have been active in selling technologies, cybersecurity technologies like firewalls and such, to their clientele, and Nixu has not been active in that area that much due to the fact that we've come from the service and audit side. So we've been providing mainly the consultancy services and human labor type of services. But now, as we have widened our services from the human labor to these technology-based services and become a strategic partner of choice for many clients, the component that we have actually missing is the kind of technology resell capability. So the clients are still getting a lot of technology in their own environments and so on, and they haven't been able to purchase that through Nixu. And obviously, if we want to be their partner of choice, having that capability and being able to serve them in that sense as well, we see is increasingly important. And in that sense, we wanted to get this sort of a hub with a team that has knowledge of how that game works, has the kind of the logistics experience, working with technology partners and so on. And we are, let's say, trying out this now, that how could that fit into Nixu's strategy and future. We are not planning of becoming a let's say, big in moving firewalls around and making that a big part of our business. We fully believe that the managed services and a premium consultancy is the key to success with our clients. So that's not like the dominating thing that we will now start shipping firewalls like hell, but it's more like that we want to have that as some component in our offering to serve our clients better. And obviously, it's when you choose the right products, there's still good margin there, and it's a good business in itself. So that's the logic there. And as you can see from their slogans and have you had a good loft today? Let's make it great. That's a sign in their office, and I think that is very nice fit into Nixu's culture and team feeling and so on. And have to say that the Esenta team has been really well. Integrating into Nixu is the wrong word, but joining Nixu as a really nice move, and over 50% of them, for example, purchased Nixu shares in our share emission. So they are very, very, I would say, tightly in this move. But please.
Hi, it's Matti Riikonen, Carnegie. I think earlier you have said that the clients appreciate that you are not technology dependent, so that you are not acting as a vendor. So the customer can basically choose any vendor's equipment, and then you are just taking care of the consulting and related services. Now, what do the clients say about this shift, and do you plan to basically become a reseller in all your operating countries, not just in Denmark?
Yes, good question, Matti. Thank you. And the what we have said is that we are technology agnostic, meaning that we don't fly any one technology's flag. But currently, for example, in our digital identity operations, we have been working with vendors and we have been delivering the softwares of different vendors. But when we go, if we take the digital identity business as an example, when we go to the client, we don't tell them that you need to work with this one technology, be it ForgeRock or SailPoint or something like that. We look at them and see what sort of technology would best fit their needs, and then we offer that technology. And the same thing applies in this technology area. And that's what Esenta is also doing. They are not flying the colors of one technology vendor. They have a multitude, I think 30, 40 different technology vendors that they are working with, and they can provide those technologies. So it's a similar approach in a sense that it's technology agnostic, and that's the difference, that we are not flying only one technology. We are not a company that has only one technology, and when our consultants go to the client, the suggestion that the consultants will probably provide is suddenly the technology that we are producing ourselves or so on. And that I still think is an advantage, and this is not gaming. And to the question that what do we plan to do across our markets, obviously now we need to learn. We need to see how our clients receive this. That's the kind of the iterative approach that we do everywhere. That let's see. But so far the clients have been quite happy about this added capability and so on. Of course, we haven't done any deliveries yet outside of Denmark from the Esenta team, but there is no statements that now you are not neutral or we couldn't be using you. So overall, it's been very positively received. Good. That's about the Esenta, and then a smaller acquisition that we did about the same time as Esenta was a Vesper CTI, that's Cyber Threat Intelligence, and that was a business acquisition from a Vesper Group, which is a Swedish let's say physical security and personal protection company. And this is an interesting trend in a sense that in the past we saw lots of companies starting to invest into cybersecurity, building up cybersecurity in next to their, let's say, traditional businesses, like Vesper did, that they were doing personal protection, meaning that they are protecting embassies, Swedish embassies, for example, in Afghanistan and so on, and they have guys with much larger muscles than I have, and so on, and they are doing smart things there, and they wanted to go into cyber because they felt that it adds on and they can do some cyber intelligence and so on. But after getting into this business and doing it for a while, they noticed that maybe it's actually quite different from our normal business, and it's not like a easy thing to do when we don't fully understand the game. And then they wanted to divest that business away. And we were there to acquire it and got it with quite nice valuation, and I think all the team members appreciated joining Nixu. And the interesting thing in larger scale is that if we start seeing more and more of these opportunities that companies that have gone into business want to divest it away, obviously we are interested in picking those when they provide some value and talent that we can add into us. The whole business, 1.6 million revenue in 2018, comes from continuous managed services that they provide to their clients. So there's technology-based services, and they have some vendors that they are using, and then they add on a service level and local consultants into those offering and sell that as a service. So it's fully managed service business that they were doing and are doing, and now we are integrating that with our CDC offering again. And the good thing here for the Swedish market obviously is that it helps us to create the scale needed to run a successful and growing operation and also consolidate the Swedish market. I think we are, if not yet, we are starting to be the biggest provider of cybersecurity services in Sweden. And that has been visible also in our clients' behavior in Sweden, that we are getting more and more traction, and also employee traction now being in Sweden for 3 years or so. Any questions about the acquisitions at this point? And regarding the funding of the acquisitions, we funded these with let's say a combination of using our cash reserves, which we still had before the acquisitions, in a quite high level, and doing a share issue to Esenta owners, because we always want to tie the owners into Nixu, so make them Nixu owners in addition to becoming Nixu employees. And then we also raised some new debt debt to fund these acquisitions, and that's also visible in our increase of our net debt. And that kind of highlights our ambition to really drive the best shareholder value and shareholder perspective, owner perspective into how we fund this and find the best ratio between foreign equity and own equity. And in this case, for example, our own share during the year-end times was not on the, let's say, highest levels, and definitely at that point we don't want to use our own share to fund these sort of acquisitions. Mika.
Yes, Mikael Rautanen, Inderes. About Esenta, can you comment on, does that business have, in the long run, a bit lower EBITDA margin profile than the traditional consulting business because there's so much technology resale?
Yeah, good question. And I would say that overall their EBITDA margin, and they were also growing and have been growing quite fast, was a little bit lower than our normal margin. They've been moving towards consultancy and managed services, as discussed also. And the margin that they receive from the technology resale, it can be quite good. So it's not like something that's always poor, but it's also pretty dependent and fluctuating regarding to client demand. So I would say that that's the little bit a little bit bigger thing to note, that the kind of the turnover might be fluctuating more when some deals come at that stage and then they don't come to next stage and so on. And also their business is quite year-end heavy, so at year-end they close lots of these technology resale deals, and then they either come in December or they don't come in, and that affects the whole year quite heavily. Historically, I think they have a little bit lower profitability levels than Nixu has been doing. So in that sense, yes, true, but maybe not only because of the technology resale part, but them being a little bit small. And that's also again the thing that now we need to add scale, we need to build up the operation into a bigger size in Denmark as well. But we are doing this in a little bit different way, and that you could see also in the earnout component. So there is an earnout component of 1.5 million for regular earnout, and then possibility for an additional earnout even above that to 2 million. But the kind of 1.5 million is the, let's say, the regular earnout component. And that component is tied into profitability for this year. So in this case, we are not earlier we have said to the acquired companies that now we want you to grow and just invest into growth, invest your profitability into growth, and just go for it. And now we are doing a little bit different strategy, so we are asking them to be profitable but still go continue growth and so on. So we are trying it out how it works like this time.
Yeah, and then in the software industry in general, we have seen that the margins of technology resellers have been squeezing, for example, as software is shifting to cloud. Is there a risk that the same will happen in Esenta's business?
Of course, cybersecurity technologies, and when you work with the right technologies, there is still possibility to get quite good margins and so on. And obviously, it's a more of a volume business. So if you get a, let's say, 20-30% margin on top of the technology license, then of course the cost of sales is the determining factor that how much is actual margin that you get to your bottom line from that deal. Of course, the big trend is that everything will move into cloud, and that will mean that there will be less technologies shipped. But at the same time, if you look at the cybersecurity market, still I think about half of all the spend in cybersecurity market goes into technologies, and that's been the area that we haven't been able to access. So I think it's and the logic for us is that if we are not selling the technologies, it's really hard for us to be the ones who convert those technologies into cloud-based services. So if we are not known for our clients as a provider of that sort of a technology component, then why should we be the ones that they trust in transferring those into service mode? So that's also for us the kind of the way that we now go into this, and then we can transfer that clientele into services. A little bit complex explanation, but hopefully opened up the kind of the logic that we have there. Matti.
Maybe one question related to the financials and mechanics of the acquisitions. How much did you book amortization related to the acquisitions now in the first half? and how much do you expect to have a kind of regular amortization related to those PPAs that you booked now?
A very good question, and now I'm happy that I have my CFO Janne Kärkkäinen here present as well. I think the figures obviously are in the report quite detailed, but Janne, can you give an?
Yes, hello. My name is Janne Kärkkäinen. I'm CFO of Nixu. So first of all, we don't book amortizations from the goodwill value, and you can see the breakdown of the acquired companies to the customer base value and the goodwill value. We do amortizations from the customer base value, and that's the amortizations is done on 10-year basis. So you can pretty much find the level of amortizations from there. Did that answer to your question?
Well, partly. So do you expect just a straight line depreciation of the assets that you book actually in your balance sheet, not in goodwill, or will there be some assets that you amortize quicker than the others, like customer relationship quicker, and then technology maybe with a longer amortization period?
We haven't capitalized any technology, so it's divided only to the customer base value and to the goodwill value. And the customer base value, they are pretty much all depreciated in 10 years period. So,
yeah. Okay, and then finally on this topic, you booked quite a lot of value in the goodwill. So was it not possible to basically allocate more of the purchase price to depreciated assets? How's your kind of thinking and strategy related to having goodwill in your balance sheet? So did you try to minimize the remaining goodwill, and this was now the result, or how do you try to approach?
Yeah, that's a very, very good question, and as we have done already several acquisitions, we have been quite systematically how we calculate the customer base value, and that how it's done according to the IFRS is pretty long story, but it has been done with the same method, pretty much in the range of same type of parameters. And if you calculate the customer base value out of the total acquisition value, it has been within the same type of range during the past acquisitions we have been doing. So pretty much around 25-30% out of the total value has been allocated to the customer base value, and there hasn't been really any like tactics that in some acquisitions we would have been putting more or less, but it has been really systematic way of valuing the customer base.
Okay, thank you.
Thank you, Janne, and thank you for the questions. So going forward with the highlights for H1, we strive to be the best workplace for cybersecurity professionals, as stated in our vision statement, and that has been, of course, work that contains many elements, the most important being the ability to provide best assignments and interesting assignments where our people can learn. But at the same time, we also want to encourage employee ownership of Nixu. We feel that Nixu is a great story and it's going in the right direction. And the more Nixuans own the shares of Nixu, they can then participate in that journey and also reap the rewards when we succeed. And in that regard, this half we launched a new long-term incentive program, which included a matching share plan for all personnel. For about 100,000 shares were available, which 99,000 were subscribed by Nixuans at the price of 12.07 euros per share. And that includes a component of added one share after 2 years of holding period that comes for free for employees. And there's also an option program for key personnel, which is quite high, a large group within Nixu, where we want to involve people both from the consultants and from the management to kind of have that opportunity to drive for a 3-year period for our let's say financial targets and how we meet the growth targets where we are aiming for. And as said, we had a really good participation in the share issue, and out of the personnel, so permanent employees at any given time, about half participated in that program. So that was a really nice thing. And what was great was that the new family members, so Esenta and Vesper Group, the people also from there participated. About half of the Esenta personnel took part in that, which is a nice, or very nice show of trust. Thank you Esenta personnel for that, not being long in Nixu and not really maybe knowing what we are about, but still wanting to become shareholders. And then to the guidance for 2019, we haven't changed our guidance at this stage. We last changed it after the acquisitions, and there we stated that we have a strong organic growth and the completed acquisitions, and we expect our revenue growth to be over 40% during this year compared to 2018. At the same time, we estimate the full year EBITDA to improve significantly in comparison to the preceding financial year, so 2018. And there we haven't stated any like concrete levels where we expect the EBITDA to be, but significant improvement. And then there's the midterm guidance that we have stated for quite long there. So let's say the latter part is the more precise guidance for this year. And then finally reminding of our strategic statement that we haven't changed much during our time in stock exchange. So we want to achieve two goals: to be the trusted go-to partner for cybersecurity services for digitalization in Northern Europe, and the best place to work for cybersecurity professionals. And I think that there is a place for both of these goals yet. There is no clear European leader yet. There are movements happening, the market is consolidating, but I think we are in a good move and a good position to actually achieve this goal. And at the same time, Nixuans are appreciating working at Nixu. We are able to recruit, we are able to retain people, so I think we are doing right things on the best place to work strategy as well. And in regards to the strategy and so on, we are planning of having a capital markets day here quite soon in fall. The actual date is not set yet, and we will issue an invitation to that date once we set the date. So quite near hopefully here. But this is where we have a opportunity to talk more about our long-term ambitions and how we see our ability to reach these vision targets that we have set to ourselves. So more possibilities for dialogue and understanding Nixu will be coming over to you shortly. That's my final slide. Thank you very much. More information about Nixu can be found in our website and Nixu investor pages. Thank you for joining this event here and over the webinar. And of course now there's still place for questions. And Matti, please.
Yeah, Matti Riikonen, Carnegie. One question related to your EBITDA guidance. I mean, it's above 10%, but now that you get the
midterm guidance.
Yeah. But now when you get the kind of benefit from IFRS 16, let's say if it's 500,000 for half year, so 1 million per year, it kind of automatically improves your EBITDA. Have you taken that into account in your midterm EBITDA guidance?
The midterm, yeah, the good question. And as said, the IFRS change gives us kind of windfall in the EBITDA change. The midterm guidance actually dates back already to our IPO in the first note, so it's starting to be 5 years old. And as said, during the time we have been constantly above the 15% growth rate, but also below the 10% level, and which have been kind of stated importance as well. And right now we are actually evaluating that, after 5 years, is that the right guidance, midterm guidance at all when considering what things that you have said and so on. But right now we didn't change the midterm guidance in consideration to IFRS. So that's more like a, let's say, above 10% as a guidance, and still of course in our levels the 1 million is not that many percentage points. So yeah.
All right.
Mikael Raudonen, Inderes. How significantly is Cyber Defense Center business contributing to your profitability improvement? So is that service area kind of like reaching the critical mass now?
Yeah. So the question regarding the cyber defense center service and it is I would say that it's on the level with the consultancy businesses right now. So we are still investing there. It's not on the kind of the optimal, but it's not a loss-making business or anything like that. So it's about on the roughly on the same level with the consultancy businesses. But it's also a business where we need to invest constantly to keep up the pace and improve the service and so on. But the kind of the critical mass is starting to be there, and obviously at the same time, when we are still growing with this pace as we are, there's a lot of growth pace and so on, and it's hard to kind of achieve the full optimal efficiency. You can't really start, cutting corners and doing all the stuff when you are still full forward speed, and that's still the kind of the modus operandi with these growth speeds, that we need to get to the clients and we need to serve them the best possible way.
Okay. Then a few questions on revenue lines. There were negative growth in a few revenue lines. First is Netherlands, quite big drop in revenue. Well, it's small, but still quite significant dip. So what's going on there? And then the continuous services revenue was down year on year. So if you can.
Yes, and there's two things. The first obviously, I guess you are referring to the country of origin of our clients, where you can see Netherlands. I don't think we are not disclosing the market area revenues, so it's the country of origin. And there you can see, for example, I think was it so that Belgium is there quite high, and that's also part of our Benelux market area. So it's where the originating buyer is coming from, not the kind of the market area revenue as such. So and now in this case, I guess in Benelux the business have been shifting a little bit, that the clients might be somewhere else, and that's been typical for that market area as well, that they are serving clients also outside of Netherlands and so on. But in overall, the kind of that market area is growing and so on. What comes to continuous services, which is also tied to the Benelux market area, we stated at the end of the year that we lost one of these acquired company ESSC's old clients, that we also had to depreciate the goodwill of that client relationship, and that was quite large continuous client support deal, which of course was not very strategic. So it was like a case that we probably wouldn't start selling right now, but it was there for the ESSC and quite sadly also quite profitable business. So it was nice, operatively it wasn't a very nice hit, and that's also affecting the continuous service business lines, and that's the main reason for that less growth in share. But I think it's also the growth share, and then when the other businesses are growing, obviously some when you have 100% distributed between different services, then obviously some needs to decrease as well in order to get there. And typically, of course, the consultancy and assignment part has been going down, but now actually that also kind of got very very nice boost with organic growth and some new clients coming in. So it was a very fast half for the consultancy business as well.
Then one more question on Cyber Defense Center. Can you comment on how significant share of revenues is coming from clients outside Finland?
Increasingly important, but still the most revenues coming from clients in Finland. Then in Sweden we are having a sizable clientele, and then in Netherlands we're just starting. So in Netherlands we've not gone, or Benelux market, we have not actually gone there yet, because we've seen that there is so much work to be done in the near areas. But now we started the operations in Benelux as well, so hired a person to lead the Cyber Defense Center business there and get the stuff running, and we are aiming to going there with full speed as well. So hopefully getting the increase. And from managed services, maybe it's good to note as well that as both Esenta and Vesper carried managed services businesses, and this kind of MDR type of business, that is also now like similar business revenue than to CDC to us. So that's an addition also coming. Previously we haven't had acquired revenue in that line, that's only been organic growth. Now there's also that sort of an acquired component there, which makes the life of analysts harder. I'm sorry about that.
Are you planning to transfer these clients of Isenta that are using other services into Nixu Cyber Defense Center services?
It's it's a hard question in the sense that the whole Cyber Defense Center, it's also a stack of different technologies, and not all clients are using similar sets of technologies. So I would say that we will definitely transfer those services under the, let's say, the umbrella of Nixu Cyber Defense Center, but whether we switch the existing technologies that the clients are using or not, maybe even not, because I think the kind of the new technologies that these teams are using are nice fits, and we've been piloting those also in Cyber Defense Center. So there is no like legacy technologies or something that we would need to get rid of. It's more like that what's the best technology fit for the client, and then it's the operating model, having the operating center, the monitoring center there and eyes on the screen, and obviously that will probably be transferred to the kind of the CDC operating center and at some stage, because the acquired team didn't have any 24/7 capabilities and so on. Good questions. More? If not, thank you. Do we have anything from the webinar? Okay, so then thank you everyone. Thank you for joining here, and have a very nice beginning of the end of the summer, if that's the correct word to use here. Thank you.